Hi guys, welcome to T-Account, a platform for educational videos for students and accountants. We have come to chapter 10, Accruals and Prepayments. What is accruals and prepayments? Actually, if you remember throughout our course till now, we have on various occasions in the discussion of different topics, we have referred to the matching concept. Even in the discussion of inventories and in the depreciation, what is matching concept? Whatever revenue you have earned in the year should be matched against all the expenses incurred to earn that revenue. Accrual basis means same thing. To calculate profit for the year, you should include all the expenses and incomes related to that year. There should be a cutoff for the end and start of the year. You will include all the expenses that have been incurred during the year, regardless of the payment. Ignore the payment status, whether you have paid or not, whether that income earned you have received or not. If that belongs to that particular year, that needs to be recorded and included in the calculation of profit and loss. Through an example, we'll understand this better. Guys, let's quickly go through an example to understand this concept better. Test your understanding 1 on page 179. Mr. John's business has an accounting year end of 31st December 2011. He rents a factory space at a rental cost of $5,000 per quarter. Payable in arrear. I have written that details just to save your time. Quarterly rent is $5,000. He pays in arrear. Arrear means utilizing the service and then paying later on, not before that, opposite of advance. During the year, how many payments? During the year to 31st December 2011, his cash payments of the rent have been as follows: 31st March, 29th June, 2nd October, 5,000 per quarter. But for December, this payment is still outstanding and he paid somewhere in January next year. Now they are asking for show the ledger accounts required to record the above transactions. Concept. Let's prepare that ledger first. Through that ledger, we will understand it better. Rental expense. These payments, whenever your accountant will make this payment, accountant who is responsible for bookkeeping, he will debit this rental account and credit cash. Okay, simple entry. So whenever he pays something for rent, he will debit this account like with this entry: rental expense to cash, $5,000. That's quarterly rent. Okay, so these payments he will book here. 5,000 cash because he made this payment, and when he paid, he debited this account. Now, there are two ways to close this. One way is, you know that this quarterly rent is 5,000 and in 1 year we have 4 quarters, 4 into 5,000, 20,000. Okay, so the expense that we need to charge to this profit and loss account is 20,000. Although he paid only 15,000, but we cannot charge that 5,000 to the next year. This is 2011. We cannot charge that 5,000 to 2012. We need to charge that to this account only. Okay. So we'll say accrual. This is basically closing balance, not paid yet, carried forward. Okay. For accrual, you will pass this entry: rental expense 5,000 to accrual or accrued rent, whatever name you give it to that account. Okay. So now you will have this amount here. The other way is the calculation of this. If you don't have this information, but you know that this for the year expense is 20,000 that you will take to the profit and loss account for the year. We have paid 15,000 only. So we still have, here we have 20,000, here we have 15,000. We know how to balance this account. So carried forward balance is 5,000, which is accrual will book in the accounts. Okay. Now what is this? This closing balance. We are talking about rent. Okay. Rent is an expense. If we have paid, fine. If we haven't paid, this is still payable. Liability. Current liability. Payable. So, liability, this balance, what is this balance? Debit or credit? Because this side was greater. We learned it in the previous lectures. Credit side greater. We put that balance on this side. So this is credit balance. Whichever side is bigger, greater, heavier, that is the balance. This side is greater. So we have credit balance. Credit balance of an expense means liability. We still have to pay. Okay, so it will come on this side. And when we start next year in 2012, it will be brought forward here. Remember, this was credit balance. So when we bring it as opening, it will come on credit side. Okay, so that's how we prepare this expense account. I need to understand. Don't worry if you are confused. It is difficult. In the beginning, it is difficult to grasp this concept. What is opening balance? Why it is coming on this side? And how it has become liability or an asset. But you will, with the passage of time and practice, you will understand it better. When you have opening, if you, have this side bigger, for instance, you have paid more, like say here, that guy, John, let's say paid 10,000. Something in advance. Okay. Now, still we have charge for the year is only, although now this 1525. Although we have 25 here, we'll have to know how to balance the account. We'll have 25 here as well. But we cannot charge 25 to this year 2011. We need to carry forward that extra payment we paid. Remember, accrual basis, matching concept, only the expenses related to this year will go to the profit and loss account. All extra, additional overpayments or underpayments will take care like this. For instance, this we have paid 5,000 more. So that will be carried forward balance. Now, Balance on this side, what is this? Actually, we have paid in advance. Asset, overpayment, asset. This is something we have paid more than what was required. We'll utilize it. We'll get some service in return for this, or we can get refund, cash refund as well if required. This is an asset. So, debit balance, because this side is now greater, debit balance coming on the credit side. Okay. So, that's how we, and in the next year, if we have this balance, it will come on this side, brought forward as an asset. Rent paid in advance. So, it can come on this side. You may have debit balance like this. Here you have debit balance, or in the previous version you had credit balance. You can have both balances, and it will be liability or asset depending on that balance, and it will come, if it comes on this debit side, brought forward. If comes on debit side, this is an asset. Prepayment, prepaid rent. If comes on this side, payable. Okay, brought forward. We'll go through another example too. Ladies and gentlemen, another example. Examples are the best way to understand these concepts. Opening balance, closing balance, liability, asset, all these things. Okay. So, I'll use as many examples as possible in this small video. Test your understanding 3, page 183. On 1st January 2015, Willie Mossop owed $2,000 in respect of the previous year's electricity. $2,000. So, I have written all that here so that we can easily refer to that. Willie Mossop opening balance. Start of the 2015, he had payable $2,000 for electricity. Payments he made during the year 2015. 6th February 2800, 8th May 3000, 5th August 2750, on 10th November 3100, and at 31st December 2015, Willie calculated that he owed $1,800 in respect of electricity for the last part of the year. So, all expenses need to be charged to the profit and loss account. He didn't make this payment. He hasn't paid cash, but we need to charge it to the profit and loss account. Remember, accrual basis, matching concept. So, question is asking, what is the electricity charge to the statement of profit or loss? Because this is MCQs, multiple choice question, and you don't have time. If you wanna quickly calculate it, short statement form, you don't need to prepare that. That is for concept purposes. If you know and you have a strong grip on T accounts, best. But for quick calculation of this, how much is payable, how much is the expense for the year, simple way is, you take all the payments, add all the payments. He made first 2800, then 3000, then 2750, okay, then 3100. All cash payments made during the year. Then add the closing balance. They are giving that is still outstanding. How much? 1800. Okay, now add this. So, the total is 13,450. Okay. Remember to calculate quickly the profit expense for the year. We are talking about some expense where you are making a lot of payments. Total payments, add the closing balance. Okay, whatever you have minus less opening, whatever you had. Opening balance, they are saying 2000. I think this will be very quick. 13,450 less 2,000. Of course, 11,450. Okay. So that will be the charge for the year. Do we have that? Yes, B is the answer. 11,450. Okay. Now, but we need to, as we have already made our mind that we need to understand that T account, and that is the name of our channel as well. So I need to promote that name as well, T account. So let's prepare T account, and we need solid concept for opening and closing balances. It was electricity expense. Let's say electricity account. Okay. Now, on which side the opening balance? Opening payable will come on which side? Liability. Remember, we have liability at the start of the year. So, credit balance brought down. Brought forward. How much? $2,000. Okay. It was payable. Remember, credit closing, now opening on the credit side. Then we made 3 payments. 6th February. How much? 2,800. Then 8th May. 3,000. Then on 5th August. 5th August, how much? 2,750. All payments will come on this side, clear. Then 10th November. How much? 3,100. Okay. He made all these payments during the year. Then what happened? As I said, he has already mentioned, this question has already mentioned that the closing balance is here, 1,800. Remember, payable, credit balance, closing balance will come on this side, accrual. Liability, still payable, so it will come on debit side. Credit balance will come on debit side. So once we know one side, we can calculate the other as well. So basically this is the same thing we calculated, 13,450. We need to put 13,450 here as well. Okay, 13,450. And this is profit and loss. Expense for the year is 11,450. So that's how we calculate it through this T account. But quickly, if you are not that strong with this, you can easily do that through statement form. How? All the payments for that expense during the year, all the payments plus closing balance minus opening, you will get the expense for the year. Okay. And remember, opening balance, if on credit side, if liability, payable, bring it on credit side. If paid in advance, that is an asset. Okay. Bring it on debit side. Assets are debit. Same case when you hear that he still needs to pay, something is payable, that is liability, you need to pay. Liabilities, liability credit balance. Credit balance will come on debit side. So you will write here on this side. Okay. If they say in that guy or the business paid in advance something, so that is an asset, will come on here as a debit balance. It will come on as closing balance on credit side, but it will be debit balance. We will go through a final example and then finish.